Hi, welcome to Akshay Money Management. This is Narasimha Kumar. Let us see the June month series. Till now, we have seen the market volatility. FIs are continuously selling in the market. So, we have seen the various stages of the market till now. So, if you recall our January month video, if you have time, just go and see it. So, we said, let us go slow in the equity. There's a time we have done a lot of profit booking to our clients. From 100% equity, we've gone down as low as 30% in equity. Remember, at that time, no war was there. Inflation was not at the peak. Before 1 month, only we had done all the profit bookings. And we told in the YouTube channel also, better do in the profit booking because valuations are high. So, yes, unfortunately, war happened, everything. After that, we have seen the markets going down. So now, this is what happened, what we predicted 100% this came true. Let us see how the rest of the year will be look like. So there's a fight between the bull and the bear in the right now scenario. So if you understand this cycle, once you see this 5 minutes video, you will come to know whether you should be in equity more or less. Or if you want to be any other classes, how much you should be. These are all things you'll understand once you complete this video. It's the most important video. So if you see when the time we have started 2020, we are saying to invest more in equity as much as possible be in the equity. If you remember 2020 April, we said invest in the equity because there's a time if you've done aggressive investment, your portfolio might have doubled by the 2 years. So why we said to be aggressive? Because there's a time we are seeing the FD returns going down. There's a time stock prices are going up. There's a time economic is recovering and bond prices are falling and commodity prices is rising. These all things indicates that you are in the bull market. In the bull market, close your eyes and invest in equity. That's the best way. Let us see. Till now, what happened, everybody knows it. So let me see what is going to happen from now. So if you see right now, everybody is complaining inflation is increasing. All countries, entire world is facing that inflation is increasing. So that indicates we came mid of this cycle. So in the mid of the cycle, what happens? Definitely inflation will increase. Once inflation increases, government should increase the interest rates. That's what we have seen the last 2 months. Last month, 0.4% government has increased, and right now 0.5% repo rates are increased. So almost from 4% to it is increased to almost 4.9%. Yes, before COVID it was 6.5%. We are much lower than those levels, but yes, we are at the coming in the upper direction. It is all near to the 5%. So the next cycle is the stock prices fall. That's what everybody is fearful that market is started falling from the February onwards in the downward journey. It is there. So this indicates that we are entered into the bear market. So till 2020, first of to almost 2021, last quarter we have seen the bull market. So this cycle we have seen almost like it happened. Right now we are entering into the bear market where commodity prices start falling. So if you see from the almost like from March onwards, commodity prices are cooling down. So this indicates we are into this side of the graph. And definitely after this one, GDP decreases. So yes, we are not decreased as low bad as last 2000 or 2000. Yes, we came to the mean or before COVID levels, we started seeing the GDP. If it falls below that one, is a problem for Indian markets. So after that one, yes, we're going to see the property valuation falling. So yes, obviously when the interest rates increases, the affordability will start going down. So what I'm saying this one, whether you like it or not, we are near to the recession. If you see entire globe, 21 countries, we have seen the Sri Lanka, Pakistan, like that if you name it, 21 countries are in the recession. India, whether we are in recession or we are already entered or going to enter, there's a $1 million question. But yes, the inflation, the cost of living is already pinching the poor people. So there's a word we should be very careful in the recession. We may see a lot of stock markets can go further low. So the one more indication that whether we are in the near to the recession is a bond prices should rise. So what happened in the bond price? This is what we have seen the entire global recession. We have seen it. The bond prices, yes, if you see till last year, bond prices were in the range bound. Right now, if you see it, the bond prices are shooting up from the last 3 to 4 months. So this indication that we are somewhere in the recession levels. So now the question is, how long we're going to see this kind of a volatility in the market? So for this one, again, one more research we have done it. So that we're going to discuss in the next month video. So a simple terms, if I want to tell you, whether we like it or not, we should see when to invest more in equity and when to be less in equity. That will going to help your portfolio to give the extra mileage. Or if you say that I want to stay long only, then you need to wait for 10 years, 20 years, this ups and downs will be there. Then after 10 years, 15 years, you will see that your portfolio has given the decent average return. But for the traders or for the investors, one thing you should understand this proper cycle. This will be approximately 4 years. I cannot say exact date to date, but yes, there is a 4 years which is started. I feel from 2020 onwards it started. So it is going to stay for 3.5 years or it's going to stay for 4.5 years. Exactly, we does not know. So ball figure number we can going to give you in the next video. So if somebody is not subscribed, we request you to subscribe it. Next video will be very much important to see how long this kind of volatility will going to sustain and whether we're going to make money or not. So I hope this video was useful and information. So thank you for watching Akshaya Money Management. If you're not subscribed, please subscribe it and share it to your friends. Thank you very much.